Okay, so I wanted to switch things up for my weekly outlook this week, and it's gonna be in a video. So first of all, you know, I just wanna say that when I'm doing weekly outlooks, I like to frame the market in ranges, right? So I just identify the current range we're in and look for where a buy side is, where a sell side is, and the low that is most likely to be taken before we reverse. We are obviously in a bullish expansion, and this is a market maker model. We have, this is our original consolidation. This right here is an internal consolidation, in which, it's a long-term target. And we have traded down lower, trading higher now, using these order blocks as support. We have this new week opening gap, and previously I kind of expected it to go down lower into that, but we are not going down lower. So we're forming this kind of wedge kind of pattern. And, I'm still bullish, but I expect price to drop down a bit lower, probably below this low, right? Because this is the current range. We just took the high, failed to close above those highs. We are deferring those highs, and we have SMT between these 2 days. So Friday failed to become the high of the week on the Nasdaq, but it was the high of the week on, you know, on E-mini S&P and the Dow Jones 30. So this is the daily chart. You can see on the weekly chart right here, we failed to close above the previous weekly chart. So the next week could probably be a consolidation week where we trade inside of this, or it could take this low and then consolidate inside of here, right? And probably engineer some liquidity for the third week of June to do something and then trade higher, right? If we like on this week, I would say in this week, we didn't really accumulate. We traded higher into the range, and we are coming back into it. We didn't close outside of it. So I would just say that this is like X, right? We didn't really do anything here. The previous week before this week's open, we we continued what was left of this range after we traded down into this fair value gap. We created this order block, traded down by Friday into the order block, and then we closed as a consolidation day at the open. And then June opened a bit lower with the new week opening gap right there, traded higher into this high, and now we're closing around the previous high, which is the range high. We're not closing above it. So we'll probably see some return into the range. Most likely we're going to consolidate, right? Consolidation is very likely. Um, but after this, I'm going to go into DXY. So we're going to look at DXY and see how the dollar is performing. So this is the daily chart on the NASDAQ. If you go down to the 6 hour chart, you can just see right here, um, we had this nice 6 hour fair value gap and this nice order block right here. I took some longs on the Asian session and then the New York session. And then, we had this short for some reason. This was crazy. We've been having some crazy runs lower, right? Very, very volatile. And, to an extent, it's almost like these weekly outlooks are pretty useless. But, you know, uh, I just use them and I use them as a kind of like a drill, right? Every week I do this every week, so I get used to looking at the market, looking at my expectations, and then I review my expectations and how my expectations played out during the week. Some of these levels too help me. Like when I was trading on Friday, I used this as a very high, high probability take profit level and resistance. So when I was trading on the 1 minute chart, I used this level to frame some shorts and some longs. So I took like 3 trades and they were all profitable when I was trading this. I traded those live. So yeah, there's that. So we closed down below, very, very bearish. We are trading inside of this order block. We're having this kind of reversal candle, right? Again, we have SMT here. I don't want to pull up the ES and YM charts, but you can check that by yourself. We have SMT here, so we could probably see some returning into the range. Right now, it's not confirmed, right? The return into the range is not confirmed because we're currently, reacting from this inverse fair value gap, this candle's low right here, trading into that inverse fair value gap, and then we're trading out of it, closing out of it. This is a very bullish close, so we could probably just take this low, which is a fair value gap, right? Trade down into this low. Let me get my drawing tool. probably trade down into this low and then continue higher. But again, doing extensive expectations like this when the week hasn't even started, you don't even know if we're gonna gap all the way down here. Maybe we just open and we gap all the way down here, and then there's like a massive opening gap. Like a lot of shit happens over the week, right? So you don't want to fill your head with, you know, so many expectations and then get thrown off when the week opens, because that's happened so many times, right? You have, oh, draw on liquidity, and then the week opens and just takes your draw on liquidity and you don't know what to fucking do. So that's like one thing. So I'm just keeping an open mind. So this is the dealing range, right? This is buy side. This is sell side. I'm still gonna post these screenshots, but the video is the main thing. So the screenshots won't really make a lot of sense. I'm not gonna type too many text. So that's it for the NASDAQ. Really quick, really simple. You have this fair value gap. Again, we are in an expansion. If this is going to be a reversal, I expect to see price close below, or at least close below this candle first, right? If this is going to come back into the range, I expect to see price close below this, a body close below this level. Now, if we do not close below that level, we're probably not going to return into the range as we might expect. Nasdaq is full of surprises, and this fair value gap that got mitigated just might be the last stop before we get to all-time highs. You never know, right? You never really know. But this is the range, and we have S&T here, so we get what we get. Going on to, yes, the US Euro USD. Hold on, let me go to this. Yes, so this was my outlook from last week, and reversal is not confirmed. This is the most probable high to be liquidated. And then we took this high and had some shorts. I didn't take any trades on Euro USD. I wanted to take some longs from this level, right? But my trigger got missed. It didn't quite get to my trade entry level. And that was just it. I tried to take one trade on the euro dollar and I did not get filled. But the entry was like it was spot on as usual. We had this weekly reclaimed fair value gap that I outlined in our previous outlook. What the fuck? Anyway, this reclaimed fair value gap that I outlined in the previous outlook, right? Where we traded in and out of it and then used this right here. This small internal reversal was the reclaiming of this fair value gap. And we traded higher using this breaker block to continue higher inside of this fair value gap. And then we traded to exhaustion. So this high was exhaustion. And I wasn't really expecting too much. But when we traded lower and we didn't really leave much fair value gaps with this large wick, I was expecting, this high to be taken and then we'll probably consolidate for a while and then maybe return into the range below this low and then reverse again. If we do not reverse from this low right here, right? If you're not going to reverse from this low, because this is the reversal I was expecting from this high. Also above this high, we've tapped this order block right here. Actually, I had like a trade from like 2 months ago. I'm not even joking that, the limit never got filled. It just kept trading lower, trading lower, trading lower. And I think I'm gonna find it. I'm gonna post it on Twitter, see if, that trade, if I had left it open, my stop would have gotten like triggered or something. Like the trade never got filled. It was just there and never got filled. And then it's come back there around that area. I can't really remember, but it's around this area and, it's reversing from that area now. So again, it's all about time. And this is like the key low I'm expecting price to, you know, get like a major reaction from. Currently, we've taken the high, right? We've taken this high, and then we're trading down below this order block, right? This is a very nice order block, very, very nice order block. And then we not nice body close below. We have this inverse fair value gap. We have mitigated the inverse fair value gap. So, if we're to be very bearish, we shouldn't really take this high. If we take this high, we're probably going to consolidate, right? If we take this high and we're trading, deep into premium, we're probably going to consolidate to engineer some liquidity before we get some action. But this is like a very nice low I'm looking at to take and then continue higher if we're going to be bullish. If we're not going to be bullish, then I expect, because this is the 6 hour chart, so this is a really high time frame. On the 4 hour chart, we have this is an obscenely large wick. So usually large wicks like this are like draws on price. So if we come down below this low and then we form a reversal, you have a free trade toward these highs. And then, on the daily chart, you can see this. We have a very, very tight, progression higher, very tight, no gaps, no gaps, absolutely no gaps. And then we're just trading really, really, really tight. We had this, it's like a balanced price range, really tight balanced price range. Close up, close down, and then it's continuing higher. So on the higher time frame scale, this is like consolidation, which is why I haven't had lots of trades. And people might try to tell you different, but this isn't really like the great. This isn't the best. EU has done better than this. Like EU can do better than this, right? The last time I had lots of trades was like in here. I took some longs and some shorts here, and then this was like glorious price action. Like I missed these days. This was so good. There was so many opportunities inside of here. February, there's nice shorts, nice longs, like everything was so clean. So when you look at this shit, you just know that okay, you don't want to over risk or even take on too much risk and then complain about price action and then blame Trump and talk about the market makers, and when you blow your account, just chill. Basically, just chill, right? Good days are gonna come, better market price, price action is gonna come. And even this is not too bad. Like this right here is not too bad. It's a really, really nice price action. We have the smart money reversal, low risk buy, first reaccumulation, redistribution, right? So we're still technically bullish. If you look at it, we're still technically bullish, and we'll probably come for these highs, but not before we take some liquidity, right? You have to trade even this right here, this range right here, this low is right above discount, so we could trade down in here, right? And then trade higher. That's like a possibility. But again, you have to keep an open eye. You can't just take what someone says unless a random dude and be like, oh, but this guy said, don't allow this to influence your own analysis. So with that being said, that's pretty much it for the euro dollar. And then for gold, let me go to gold right here. So right. So again, on the 6 hour chart on gold, we are accumulating, right? You can see there's lots of ranges. You can't compare this to this. This is progression. This is a ranging market. This is consolidation. This is a reversal. This is another reversal. This is a smart money reversal. This is a market maker buy model, right? But it's consolidating, most likely because of, I don't even want to bother myself with the reason it's consolidating, right? I don't really want to bother myself. You can see on the monthly chart, it's not really doing anything. May was an indecisive candle. June opened inside. It's currently an inside bar, right? You know, uh, uh, April. I think this is April. This third candle right here is April. Had a really really large range, and May was an inside bar. So we are consolidating on the higher time frame range, and this is the 6 hour chart. We've had some really good trades. Like I said, I'm a scalper, so many times the macro moves don't really bother me. These are just outlooks to have an idea on where price is trying to reach for. In case you have an opportunity to hold on to a trade, maybe you take a scalp trade, inside of this week, you buy this wick, and then you probably close around here, right? And then price continues higher. You're going to be like, oh, I bought here, but nobody cares because you didn't hold, right? So it's good to know the potential of markets. That is why I do outlooks. That is why I look at the higher time frame, to know the potential, to know where we're likely to get to, what we're likely to do, when we're likely to do it, and if we're not likely to do it, how I plan to stay in or out of the markets. Because frankly, it's not every time. You don't have to trade every time, right? Sometimes you just have to wait for the market to show you its hand and then you trade. So on the 6 hour chart, we are currently trading out of this balanced price range higher. It's like a really, really big redistribution for some reasons, over a long period of time. So that's like characteristics of a consolidating market. And truth be told, when the market is consolidating on a large scale like this, there's so many trade opportunities on the lower time frame. That's why gold has been really, really good in the Asian session. And you know, if you don't trade gold in the Asian session, if you're awake, then you should definitely check it out. It's really, really nice. And then if you're looking at price action currently, um, on the 4 hour chart, it's not the 4 hour chart. On the 1 hour chart, I was talking about this balanced price range you know, with my people, both on my Telegram and in the Discord, whatever. That was a nice balanced price range that I was looking to take shorts from, right? But I woke up late. I wasn't awake by 6 a.m. and I just came woke up. The shit was dumping, right? And at 9 a.m., yeah, I could have taken some trades, but also, yeah, I got I got bent over by Nasdaq. I had a trade and I got spiked out of the trade. I was trying to trade pre-market and it just threw me off on the day. And a lot of my expectations for gold, like this was a very, very nice trade. It was so nice. I was waiting for this. It's very nice. It's a nice zone all the way over here. So that's why you have to like look at the macro, look at the range, look at everything. You don't just focus on one tiny little candle and be like, oh, I caught. Nah, you gotta like look out, see what you're missing out on, see the potential, so you know exactly what it is you plan to do. So we're gonna go back to the 6 hour chart right here, and basically we are in a reversal now. Depends on the type of reversal. Considering the fact that we are consolidating, a close below this level should signal like a proper bearish close below this level should signal lower prices. But we also have these lows, right? These are relative equal lows. And in my experience, price is very likely to reverse from relative equal lows. Let's save this. In my experience, price is very, very likely to reverse from relative equal lows. So when you have this low right here, we could probably close below this and then reverse from this, right? But we are bearish, and I do not expect to see price reverse until we take some of these lows, right? So these are bearish targets, and I expect to see price trade down lower into these levels. Again, you have to keep an eye on events and macroeconomics. You don't really have to bother too much about it, but if Trump says some bullshit, I can bet you gold could get to like $5,000 in a week. Okay, so keep an eye on that. We have these nice lows over here, and we should be able to frame some really, really nice trades. We have this inverse fair value gap right here. So this is a very nice level. You can see we have this wick here too. So you might not expect to see price trade all the way back into this fair value gap. We could just open on Monday, right? I could even take this trade on the Monday Asian session. Could open on Monday, trade higher into this. Could open on Monday, trade higher into this level right here, and then drop lower, probably into the new week opening gap. That could be like a very nice range for you to frame like some scalp setups or whatever it is you do, right? We're bearish. This is the range. Buy side, sell side. It's pretty simple stuff. You just have to, look at, you just have to like see it basically. If you don't see it, you don't see it. If you see it, it's kind of easy. All you have to do is to be patient enough to wait and then, set the right stop loss and all that stuff. It's not that hard, to be honest. I'm not going to lie to you. So that's it for this. This is a 6 hour chart. If you go on the daily chart on gold, you can see it even clearer. Right? This is a clear reversal, and we're gonna head for these lows, at least the low of this bulky candle, and these probable lows. And this is the most likely low. I'm gonna change this from PDL so you know that it's not. No, this is the most likely low to have a reversal from. And if you close below this, well, this is the next spot, and we could probably get a reversal from this. These wicks, these wick levels are like, rejection blocks, and wicks are order blocks. So when you have wicks like this, if you go back to the 6 hour chart, you can see that these are like, large order blocks. And inside of accumulations, this is an accumulation technically, right? Because price is in a tight range. This high is kind of like retail resistance, right? So if you take this entire range and you get the equilibrium, if you get your volume to, you're going to see that price pulls up around this midpoint, which is these lows right here. So if price trades into this level, it could very, very probably buy above this high, above this high. So it's something you should definitely keep an eye on. Yeah, that's basically it. So we've covered the euro dollar, we've covered the NASDAQ, we've covered gold. That's basically it for the weekly outlook. I'll probably cover Bitcoin, but that's too much stress. I'll see you guys later. See you in the next one. GG. Good luck. Good trading. See you next one.